Good morning, everyone. We shall start this session in another minute. I think we are good to go now. A very good morning, everyone. Welcome to Prebell with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst. Before we go ahead, disclaimer for this podcast is that whatever stocks or sectoral indices we discuss are only intended for educational purpose and should not be taken as an investment advice. First, let's look into how the Nifty is placed at and what are the levels we are looking into and what is the market status we are in. Currently, we are in confirmed uptrend. As we all know, we have changed the market status to confirmed uptrend on July 18th. Since then, market had a very good rally around 1500 points. After which there is some slight profit booking and index retraced back towards its 21 DMA. There have been 2 distribution days after changing the market status to confirmed uptrend. However, one of them has expired because of 25 trading session rule. The reason for it is that after 25 trading sessions, the impact of that particular distribution day will be negated because it has happened long back. So it won't have any negative impact on the market. That is the reason we negate or will expire the distribution days after 25 trading sessions. A distribution day is when a Nifty declines 0.2% or more on volume higher than the previous session. That indicates the fall is significantly higher and also the volume is also higher, indicating a strong selling pressure. This distribution days give us an indication about the weakness in the market. So accumulation of distribution days 2, 3, 2, 4 or 5 indicates very steep weakness in the market, and in that scenario we'll be changing the market status to under pressure. When we are in under pressure, we'll be slightly cautious while adding stocks to our model portfolio. Our aggressive nature will come down. Currently, as we are in confirmed uptrend, will be 100% exposed towards the market. So most of all our capital will be invested into the markets, and number of stocks in our model portfolio will be also highest when we are in confirmed uptrend. Once we move into uptrend under pressure, the number of stocks in model portfolio will come down because most of the stocks will be underperforming or going down, reaching their moving averages. In such a scenario, we'll exit them and we'll try to cut down our model portfolio exposure towards the market. Currently, Nifty is trading slightly above its 21 DMA. We want the market, the index to hold that level and rally further higher, so that a fresh rally will come around 18,000 level. We might see good buying happening. However, globally the scenario is not so good. That is the reason Indian markets are also slightly not. They are moving sideways. However, now global markets have been under pressure. They have been falling significantly higher compared to Indian markets. So this is what I was talking about. Moody's, a major broker company, has told the same. Even though the global markets are in turmoil, there won't be much negative impact to the Indian recovery. As you can see, Indian markets are also resilient, so which can be observed as well by looking at the major indices, Nifty and other broader indices as well. European Union has been facing energy crisis because Russia has shut down most of its pipeline towards which supplies gas to the European nations. The gas prices have surged nearly 30% in the recent times because of this. Also, yesterday we have seen Germany has announced a relief plan around 65 billion euros to tackle this energy crisis. So most of the spending is towards the energy crisis. So the growth and capital expenditure will definitely come down in this uh, part of the world. So there has been a lot of turmoil in the global markets. US is being facing inflation issues and unemployment issues as well. European nations are also facing inflation and energy crisis. However, Indian market has been very resilient if you compare with other global peers. With the festival season coming up, FMCG firms are really bullish on the economy. The spending will definitely increase this time. Last 2 years, we had COVID and the spending is not so up to the level. Now that the COVID has come down slightly and uh, people are going to spend a lot and FMCG firms are going to benefit the most out of it. Other companies which are in news are Salazar Technology Engineering has approved a fundraising around 82 crores through issuing equity shares to qualified institutional buyers at a share price of 27.3 per share. Aspire Hospitality Group is planning to invest a capex of 550 crores in the next 4 years. With this capex, they are going to add nearly 20 hotels with over 700 rooms by the end of 2023. Indigo has had a new CEO yesterday, that is Petras Elbers. He has joined the company yesterday and he has, with the effect of being in CEO office starting from yesterday. Previously, he has worked for Royal Dutch Airlines. He has a pretty good experience handling airlines previously as well. Wipro, a major IT company, has collaborated with Palo Alto Networks to deliver major network solutions to its clients globally. So these stocks will definitely be under radar today. There might be some volatile moves in these stocks during the today's trading session. Coming to the institutional activity, yesterday both foreign institutional investors and domestic institutional investors have bought good quantities of Indian equities. FIs have bought more than 1100 crores worth of equities. DAs have bought nearly 630 crores of equities. Global markets, you can see US market was closed before yesterday, and yesterday they have closed with a negative bias around 0.4 to 0.7% lower. Asian markets are trading mixed, apart from Shanghai Composite, which is trading on the positive side of 0.2%. Nikkei and Kospi are significantly lower. They are trading 1.1% to 1.4% lower. Our Indian market is also expected to open lower. SGX Nifty is indicating nearly 200 point lower opening. Yesterday Nifty has closed nearly 17,650 level. Currently we are expecting a opening near 17,500 level. That is around 100 to 150 to 180 points lower opening. If this lower opening is sustained, and we might see further selling in the market as well, because Asian markets like Kospi and Nikkei are trading more than 1% lower. So we might see similar reaction in Indian market as well. For the chart of the day, we have picked Gujarat Alkalie. You can see our chart has broken out yesterday. It is a stage 3 breakout. Ratings wise, the stock is looking pretty much good. EPS of 79 indicates a strong profile. Technical profile is also pretty good. RS strength of 83 is good. ABD rating of A plus is also very good. You can see the quarterly and numbers of its sales and EPS. They have grown double to triple digits every quarter for the last 5 to 6 quarters, which is a very good sign of a consistently growing company. That is the reason the stock is also breaking out of its stage 3. That indicates the stock has never undercut the previous base low. The stock is clearly trading above its key moving averages as well. Talking about number of funds, there is a very good accumulation of shares by the institutional funds. You can see from September 2021 around 65, it has increased to 93 by the end of June 2022 quarter. So institutional funds taking a fresh position is a very good sign of the company. That indicates a strong fundamental and technical profile of the company. Thanks for attending today's pre-bell.